All right, so today's lesson is going to be simple, which is like support and resistance, what it is, what the candlesticks mean, what they are. So basically, a candlestick is just data. This is data. It just shows that there was buyers and sellers in the market from the price went from 29,456.50 all the way to 28,746. So it's just each candlestick is just a story is for data. So when you look at the markets, you want to look at the structure of it. Is it an uptrend or a downtrend? So for an uptrend, it just means that the market is creating higher highs and higher lows. For a downtrend, it means that the market is creating lower highs and lower lows. So uptrend, you think about walking up steps, up, go up higher, come back, go up higher, come back, and so on. Now, if only the market actually moved that simple all the time, but what I'm saying is higher highs, higher lows. So this is higher. Well, not this one. We'll put it here. Higher high,
Mhm.
higher high, and then a higher low. Same thing. Higher high. Put this here. And higher low. Again, gotta keep it simple. Higher high and higher low. So this is an uptrend. And for a downtrend, what do you think it is?
Higher low.
Lower high. So it'll go something like this.
Mhm.
If that's a really good market structure. We don't always get that lucky. Let me just move this over. Make this a little shorter. So again, not there. Lower high. Did I say lower high or higher low the first time?
You
Anyway,
said lower high
okay.
the first time.
I mean, my bad. This is a lower low because this would be a low, right? And
Mhm.
then now it's a lower low, and then a lower high,
Yeah, that's what you said. That one was like on lower low.
and then a lower low. Again, lower high. So when I say higher high, higher low, lower high, lower low, it just means that the market created a higher price point, and then when it came back down to here, the market didn't go lower than the previous low. So a higher low, like you know what I'm saying? And here there's a higher high. The market had a higher price point, and then it came back. There's a higher low, meaning the market is higher than the previous point. And so for a downtrend, which is here, it's the same thing. Um, so to say this is a high, and it pushed
Mhm.
down and created a low. Now this low is lower than this low, but don't even think about that. So here's a direct direction. Here's a lower low, lower high, meaning the market pushed up, um, lower. The high was lower than the previous high, and then the lower low, meaning the market pushed down past lower than the previous low.
Mhm.
So it's a downtrend. If you just think about steps, if you're walking down the steps, downtrend. If you're walking up the steps, uptrend. And then the other thing is, she know how to do it. Okay, I was just recording the video. So when you have a family, things like that happen, and it is a-okay. When you have a full life, um, I might cut this part out of the video, but I might not because that's the reality of it. And yeah, so when the market isn't making higher highs or it's not making lower lows, it's just going sideways, it's ranging or consolidating.
Mm-hmm.
It's just doing this, just going sideways. That's a ranging market or consolidation. So uptrend, downtrend, ranging market or consolidation, whichever one a person will be comfortable with. Oh, I gotta keep it there now. I keep that there. Um, so the next important thing, let me just delete all those. Um, remove objects. So the next important thing to consider when you're looking at the market is where to find your entry. So it's called support and resistance or supply and demand. I trade supply and demand, but I'll keep it simple and go over support and resistance for this video. And I'll do multiple videos um, for other information. So when you look at the market, you want to find levels where the market has tested multiple times, and it should be easy to find it without squinting your eyes or um you should be able to see it. So real quick, I'm just gonna point this area out. The market was consolidating, and this was about how many weeks? This is from February 5th, 2026 until February 13th, 2026. So for a while, just consolidating. Prior to that, it was a small downtrend,
Mm-hmm. Uptrend, downtrend,
downtrend. Eventually started to go up, uptrend.
uptrend.
But you want to like look for support and resistance. So when you go market charts up that way, you can go to the daily first. Um, and this is on a daily, and that was some good market structure on pullbacks there.
Mm-hmm.
And then we'll just go to the 4 hour to see what it looks like. Almost, almost. So I'm gonna backtrack real quick. So you wanna, it's called a um, top down analysis. You go to the highest time frame, like the monthly, to find like the direction of the market or any major levels of support and resistance. Right now, it's just strictly uptrend. So you have to go down to smaller time frames. And we'll fix that. So for uptrend, you will get in the market. So you'll let the market break structure and then you get in on retest. So when you think about support and resistance, you want to think about the floor as a support. Like when you standing up, the floor is supporting you from falling through the ground or falling through your house. This is your support.
Mm-hmm.
And then the resistance is like a roof. Like you can't go through the roof. So there's resistance there.
The rain is like, say it's raining, like that's the resistance, like the house roof.
No, it's resistance for you to jump up. So if you're
Mm-hmm.
on a trampoline and you want to jump up, your head will hit the ceiling
Mm-hmm.
because it's resisting. You can't, it's not open for you to
Mm-hmm.
jump through. So for example, there was support here, right?
Mm-hmm.
It is like it's like the floor, right?
Mm-hmm.
Matter of fact, I'll just do this one too. Uh, there was a support and it tapped this level once,
Mm-hmm.
shot down, tapped the level again, shot down, and then it finally broke through. There was a little resistance there, but it finally broke through. Now this level becomes the resistance. So before, I mean, I'm sorry, this level becomes the support. So before it's the resistance, like a ceiling. When it breaks through, now it's the support.
Mm-hmm.
Again, now this is the support. It breaks up. It does not break through. Comes down. Comes up again. A little bit of difficulty, but it finally breaks through. So what does this level become for this area? So when it
The
breaks up, it becomes what?
the
The
resistance when
support.
it the yeah, that's the support, and then when it jumps up, it becomes the resistance.
Yeah, so now it's the support because the market broke through the structure. Now it's the support. It bounced again, boom, resistance here. It hit it once, twice, shut down, and then broke through. So when it
Um,
broke through, when the market shot through here, what does this level become?
the resistance
There, no, before it's the resistance, but when it goes through, what is it now? After it goes through,
after it goes through, that's the it helps it.
it's the support now.
Yes, the support now,
So
and so that's gonna be the resistance right here.
up here, yep,
Yeah.
exactly, up in this area. I just didn't put the little um I didn't mark the chart yet. So this level was previously the resistance.
Mhm.
It broke through and then it became the support.
Yes.
Right here, right now, I mean at the time it was the resistance. It shot down and then broke up. And then
Now
that
that's the
became
support.
support. Yes. Each time it broke through, that's where you find your entry.
Mhm.
It'd be on a smaller time frame. So basically that's what the support and resistance
Mhm.
stands for in trading.
Mhm.